What if your investment portfolio didn't just grow over time, but actively paid you consistently, week after week, month after month? Not just a little extra, but enough to genuinely change your financial trajectory. For years, we have been told to save, invest for the long term, and maybe, just maybe, retire comfortably. But what if there is a more proactive way to build financial independence? A system that generates significant income now while still preserving your capital for the future. Hi, I'm Joel. If you are new to this channel is all about building systems that leads to our financial freedom. Today, I'm pulling back the curtain on my personal 3-part income system. The exact blueprint I use to manage my own money, balance growth with high yield income, and ensure I have liquidity without ever having to sell my core assets. This isn't just theory, it's my transparent approach to making my portfolio work harder for me. And as always, this is not financial advice. Everything I say here is for entertainment and educational purposes. Please do your own research and invest based on your risk tolerance. The world of income investing is evolving rapidly. The days of simply buying blue chips dividend stocks and waiting for quarterly payouts are, for many, no longer enough to keep pace with inflation or accelerate financial goals. We have seen the rise of innovative ETFs, particularly those employing covered call strategies that promise significant higher yields, often on a weekly or monthly basis. Funds from providers like Rex, Roundhill, Neos, Tap Alpha, and UMax are changing the game. But with great potential comes great responsibility, and often significant risk. My journey has always been understanding these new tools, integrating them thoughtfully, and building a robust system that leverages their strength while mitigating their weaknesses. It's about creating a portfolio that doesn't just survive, but thrives, providing consistent income and flexibility. Every strong financial system needs a solid foundation, an anchor that provides stability and reliable growth. For me, this comes in two forms: iShares Core S&P 500 UCITS ETF, or ticker symbol CSPX, and iShares 0 to 3 months Treasury Bond ETF, or ticker symbol SGOV. CSPX is one of the most popular exchange-traded funds for international investors, particularly those based in Singapore and Europe, seeking exposure to the S&P 500 index. It is designed to track the performance of 500 leading US companies across various sectors, including technology, financials, and healthcare. I chose this because of the superior tax efficiency, 15% versus 30% withholding tax. Thanks to the US-Ireland tax treaty, CSPX is subject to only a 15% withholding tax on dividends at a fund level, compared to the 30% withholding tax often applied to US domiciled ETFs like VOO or SPYI held by non-residents. If you are a UN investor, you can consider VOO as it tracks the S&P 500, giving you exposure to the 500 largest best performing companies in the US. Historically, the S&P 500 has delivered an annual return of about 10% since 1957. For CSPX, this isn't about chasing quick gains, it's about consistent, compounding growth over decades. This forms the bedrock of my portfolio, providing that essential market exposure and capital appreciation potential. Next, SGOV. This fund invests in short-term US Treasury bonds, typically maturing in 0 to 3 months. Why SGOV? It's my cash management solution, offering a safe, high liquid place to park capital while earning a competitive yield, often tracking the federal funds rate. It's not designed for growth, but for capital preservation and generating a reliable, a bit lower income stream. Think of it as my ultra-safe harbor, providing stability and a place to hold funds for future opportunities, or as a buffer against market volatility. So together, CSPX and SGOV create a balanced anchor, growth potential with capital preservation and steady low-risk income. Now, with our solid anchors in place, we can introduce the Income Accelerators. This is where I tactically allocate capital to generate significant higher income, often on a weekly or monthly basis, using covered call ETFs. These funds are designed to provide enhanced cash flow, but it's crucial to understand their mechanics and risks. This is where my personal holdings come into play. I have over 20 ETFs, and I'm just going to name a few key ones and what they do over here. First, QQQI, NEO's Nasdaq 100 High Income ETF. This is a monthly payer that aims for high income from Nasdaq 100 exposure. It's shown good NAV preservation relative to some peers. Next, SPYI, the NEO's S&P 500 High Income ETF. Similar to QQQI, but focused on the S&P 500, providing monthly income with a covered call strategy. Next, BTCI, NEO's Bitcoin High Income ETF. This is a higher risk, higher reward play from NEOS. It aims to generate high monthly income by investing in Bitcoin ETPs while utilizing a covered call strategy to benefit from Bitcoin's elevated volatility. Next, ULTY, a UMAX fund that aims for high income, often with weekly distributions by applying covered call strategies across a diverse basket of underlying ETFs and stocks. Next, TSLY, the UMAX Tesla Option Income Strategy ETF. This ETF is focused on Tesla. This fund aims for high income from the volatility of a single high growth stock. Again, a tactical play with higher risk. Next, GDXY, the UMAX Gold Miners Option Income ETF. This UMAX fund targets high current income via a synthetic covered call on the VanEck Gold Miners ETF, allowing investors to monetize the volatility of the gold mining sector. Next, we have the QDTE and XDTE. These are from Round Hill and are designed to provide enhanced income by selling out of the money, 0 days to expiration, calls on the Nasdaq 100 and S&P 500 respectively, often with weekly distributions. And lastly, I want to talk about TSPY, the Tap Alpha SPY Growth and Daily Income ETF. This fund is from Tap Alpha that targets the S&P 500, leveraging a daily covered call strategy to provide current income while maintaining prospects for capital appreciation. So my approach with these income accelerators is not to make them 100% of my portfolio. Instead, they serve to boost my overall cash flow. I'm constantly monitoring their NAV health and distribution sustainability. When distributions hit, I assess whether to reinvest back into these funds or more often, direct a portion back into my CSPX anchor to strengthen my long-term base. It's a dynamic balance, using the income these funds generate to fuel my overall financial independence journey, not just to spend it all. Now, for the third pillar of my system, and one that often surprises people, asset-backed liquidity. Many traditional investors rely on the 4% rule, selling off a portion of their portfolio each year for expenses. But frankly, I don't subscribe to that old method. My preference is to borrow against my portfolio to access liquidity when needed. This is a sophisticated strategy that allows me to tap into the value of my investments, my stable anchors, and my high-yielding income accelerators without actually selling them. So why do I do this? It allows me to maintain ownership of my appreciating assets, continue benefiting from their growth and income generation. For the US investors, this can potentially defer capital gains taxes. It's about using my portfolio as a dynamic tool for financial flexibility, rather than being forced to liquidate my hard-earned investments. Of course, this requires careful management of loan-to-value ratios, understanding interest rates, and being fully aware of the terms of any portfolio loans. It's a more advanced approach to liquidity, but one that aligns perfectly with building a system that works for you, giving you control and flexibility over your capital. So there you have it, my personal 3-part income system. The anchors for stability and growth, the income accelerators for tactical high-yield cash flow, and asset-backed liquidity for financial flexibility. This isn't about finding a money glitch or chasing every percentage point. It's about building a thoughtful, transparent, and dynamic system that balances growth and income, and risk and reward. It's how I'm working towards financial independence, and how I believe you can too. I'm constantly refining this system and sharing my journey, including how my holdings like QQQI, SPYI, BTCI ULTY, TSLY, QDTE, XDTE, TSPY, and GDXY are performing. If you want to see exactly how these systems play out in the real time, make sure you hit the subscribe button and ring the bell. Let's build our income machines together. Alright, I hope this video gives you some insights on how I invest. I make regular income reports on my portfolio holdings. If you want to know the latest updates of my monthly dividend income, make sure you hit the subscribe button and ring the bell. Thanks for watching, and I'll see you in the next one.